Hi everyone, it's Evan here from the Trade Risk on Wednesday, March 15th with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. Now, happy Fed Day to everybody. Before we get into markets, I want to remind you all that I am holding a free webinar next week on Tuesday, and it's going to be on market regime filters. That basically means classifying the market and how you can classify the market and break the market into sort of segments to help you make better trading decisions. That's what we're going to be covering next Tuesday at 1 p.m. You can head to thetraderisk.com and find the link on the homepage. You can go to traderisk/webinar, or you can click this link in the top right-hand corner that should be appearing. Drop your email there and you will be registered. So I hope to see you all there. Now, getting into the markets today, S&P 500, nice bullish move here, up almost 1%, 84 basis points on the day. This is Fed Day. Market responding favorably to the rate hike and the rhetoric that the Fed put out there today. We came in on a bullish note, so we started the day higher. Oil was up. That could have, set the tone for us, but we really just saw strength throughout the beginning of the day, and then that just accelerated higher throughout the day after the meeting, after the news was released. So if we look, let's look like we usually do here at the weekly chart first. You can see we're up 0.5% here on the week. We're higher than last week's lows. So last week was our first red week in the S&P 500 in quite some time, and now we're starting to move higher. We're above last week's highs. That's a strong, good reference point in the short term. So that's 238.12. As long as we can stay above there, that is generally a good longer term signal or indication or pivot point, depending on how you want to use that. And the highs from the prior week, all-time highs, are still sitting up there at 240.32. So back to the daily chart. We know the weekly looks good. You can see we are in this range. It's about a 4.5 point range from 235.50. That's essentially last week's lows up to the prior week's highs. That's sort of the playground that we're in right now. And we talked quite a bit about this pullback over here last week. We actually did see some oversold conditions. We made note of that. We talked about that in the video. We've talked about that on the blog. And just yesterday, I put out a post just sort of discussing the overall landscape heading into the Fed. And we did note that, the market had pulled off. I know it's sort of laughable given how far we've come higher, how far we've run over the past 6 months. But we did, pull back 5-6 days in a row. Some sectors saw a bigger rotation and sell off than others. We did see some short-term oversold readings. We saw breadth deteriorate and the VIX spike. So there were a lot of things that sort of suggested that the market was already pricing in or doing a little bit of the worrying for this meeting ahead of time. Again, you can never know for sure. I'm not trying to play the prediction game on how the market's going to react to the announcement, but it's just observation to say that we are sort of coming off of highs into a meeting rather than just a V-shaped rocket higher. It would be a completely different situation if we still were trading higher, surging from Wednesday the 1st's highs and continued up, and we're trading at 246 at all-time highs with no pullbacks whatsoever into a Fed meeting. That would just set a different tone, a higher risk tone. So with that said, we did get that bounce higher, unwinding some of those short-term oversold readings that we had, and now we're back to the existing uptrend that has been in place for some time, and we have some good, clear upper level reference points to use, and that is very clearly now yesterday's low at 236.16. And then last Thursday's low at 235.74. So once again, we have basically more reinforcement here that this is going to be a key level going forward, this 235 to 236 band here in the S&P 500 in the SPY ETF. So if you're still trying to stick and trade along this market, have some exposure in this market, this is a good sort of guide reference point for you moving forward. That's certainly what I'll be looking at and using excuse me, and trading off of. So we're heading higher, maybe retest these all-time highs here at just a couple of points higher above us now. We did pull off the highs just a little bit, but you can see we're in motion, little uptick in volume there. Life looks good here in the S&P 500. If we go to the IWM, very quickly now, we are back to this very important longer term 138 was resistance, became support, now looking like it is resistance again here with that bit of a fade. But this is a key market inflection point back to, back to really paying attention to the small caps. And I think they're very interesting because, yes, they have been lagging. They haven't gone anywhere since December, at the beginning of December of 2016. So it's been, almost 4 months now, and we're completely stagnant. And again, that doesn't have to be a horrible thing. We did have a huge move in November. So if this market decides to resolve higher, this is sort of the same sort of binary, outlook here that I was looking at while we were chopping around in here. But if we can start to push higher here and then lead, become, the small caps become the leaders for the next couple of weeks, couple of months, then, again, life seems pretty good here for the bulls on the longer term time frames. If the IWM starts breaking now this very major support down here around 134, that would be cause for concern. So right now, we are underperforming. It's something to pay attention to. Just yesterday or a couple of days ago, we were almost flat and almost negative on the year for the small caps. So I think, again, you have some very clear reference points. 134, if you start breaking below there, you start closing below there on a daily or even a weekly time frame, that would be concerning for the market. If we can get above 138, then I think life again looks pretty good. And if we start to resolve from a 3-4 month consolidation upwards and start trending higher, then again, I think things are going to look pretty good. So that's what I'm looking at there in the IWM. I like that it's back up here. It had its time. We saw the dip buyers kind of step in here with all these little tails below 135. Encouraging. Let's see if they can hold on to it. Maybe this is a one-day pop higher that gets violently sold off. We'll have to see. But for now, it's at a pretty key inflection area. And the Qs, the NASDAQ 100, continues on its merry way higher. Started to slow down in here over the past couple of weeks, but you can see it's back to moving to all-time highs, just grinding away. Not a strong momentum state, here, but certainly not doing anything wrong. Continues to look good and just grind it out. So that is the overall landscape. As far as our positioning, we're still long. I mean, we were net long coming into today. We added a little bit more exposure. And again, we're starting to, trim out of some positions that get overextended, rotate into new names, the same sort of, game plan that we generally have on in sort of these uptrends, these day one potential starts and so on and so forth. So we're still holding on there. Let's take a look at some other markets. We'll start with TLT, which was very much in focus today as well, and it did see a nice rally, 1.22% to the upside. And these lows that we undercut here this Monday, that we undercut the December lows Monday, and then we popped higher yesterday, and now we're pushing higher off of that. So again, we got a little bit of a retest here. It's held successfully so far. A little bit of an uptick in volume today. This looks good. You got a good reference point now. Monday's lows, 116.70, right around there. And again, if you want to tactically try and play this bounce for a move back up into this range, I think that's sort of reasonable if you have a stop loss in place. A weekly time frame we know is certainly more pessimistic here in TLT, but for now there's a little bit of maybe a sigh of relief is what TLT is basically signaling today, that there aren't more hikes coming down the path. But again, I'll leave it to the experts to decide why we're rallying on that. That's TLT. If we go to USO, saw a nice bounce back as well, up almost 2% on the day. Yesterday we had the gap lower, but we saw that intraday reversal closing near the highs, and then we saw follow through today. So there's been an uptick in volume over the past 5 or 6 days. That makes sense as we broke down from a very tight sideways long range, but now maybe we have some type of short-term bottom. We got fast moving averages still racing lower, so technical picture still very much bearish here on USO on the intermediate term, but perhaps a little bit of stretched capitulation, dead cat bounce type of action. Maybe it's maybe it's a V-shaped rally. It could be, but for now we'll have to just wait and see. So that's a little bit of an unwind happening there. Natural gas still sort of in no man's land here as far as I look at it, as far as actionable setups. The one kind of observation here is the uptick in volume on these lows, particularly this accumulation, this rise off of these lows. We actually are on heavier volume the past 2 weeks rather than versus the big sell-off here that started February. So that's interesting to see us, with this uptick in volume here. That could be a positive development if we can start to hold these lows. So UNG continues to hang in there. Again, tough for me to want to get long, or really make any type of move on this right now, but something I'll continue to pay attention to. If we look at gold, nice move higher, up 2%, strong uptick in volume, right back to this reference point, this key longer term reference point right around 116.50. Maybe got a little short term low to, that got put in there today. Same thing with silver, also 2.75% move, uptick in volume, nice range expansion. Maybe we have a nice higher low that just got put in place from this trend that started in early 2017. So silver looks good, also clearing back above 1630, which was prior resistance here in December and January. So silver, gold, metals, oil, everything bouncing today. And again, that is certainly helped by the landslide here in the U.S. dollar, which you could see breaking snapping this trend line, snapping this little trend that it's been rising from since the start of February. You can see down minus 1.18%, helping fuel those commodities to the upside. So that is the major markets. Let's take a look at some sector analysis. We'll start with things at all-time highs. It's semiconductors. And these really haven't stopped working. They've just continued to grind out highs, just like the Nasdaq 100, the Qs. Hasn't been rip-roaring momentum in this ETF. It's really just been a grind higher, no closes below the 20 period, and once again we're just seeing more all-time highs. So semis continue to work. XLV, this is healthcare, something we've talked about now for quite some time, but this continues to work, up 1%. Continue to see major rotation here into the healthcare names. IYT, this is a more beaten up. This is the Dow Jones Transportation Average, and this has been more beaten up than some of the other sectors out there, getting a bit of a snapback today. You could call it off this trend line. This is a little subjectively drawn. You can draw this how you'd like, but IYT getting a little bit of a snapback. Would like to see if this can materialize a bounce up to back up towards highs. That would be constructive to get this group back participating on the upside. Cyclicals also, or discretionary, also making new highs today. That's a positive move. XLI industrials, so this is kind of like the Dow Jones, the IYT. Is you saw a bearish candle yesterday, close below some recent support. Looks like things could have gotten ugly yesterday, but today we flipped it. It proved to be a little bit of a fake out down here yesterday, and support has held. So for the industrials, XLI, that's a constructive note. Maybe that fuels a several day move to the upside. That would be constructive for this market. XLE, this also continues to battle it out here right at this $70 mark. That's the trend line that extends from the 2016 May prices. So XLE continues to fight it out, and again, it's now back above last Friday's highs, closing above Friday's intraday prices. So is constructive. Maybe again, uptick in volume here over the past week or so. Maybe some of these stocks are putting in some meaningful bottoms here and would see some rotation. Got to get oil to start to stabilize. Maybe again, we're in the process of that. So this could be, I still think this is an interesting sector to pay attention to. We have exposure here, and I think it's something worth eyeing. So I think we're going to end things there. I hope you guys had a good day trading. Don't forget about that webinar next Tuesday. You can head to the site, traderisk.com, and sign up. Until next time, thank you for watching, and talk to you again soon.